In section 6.3, we are going to talk about deductions from the pay will focus on Social Security, Medicare, and some other taxes. So we'll talk about FICA, which is Federal Insurance Contributions Act, and FICA tax, and we want to find the FICA tax and Medicare tax. And we also want to determine the FICA tax and Medicare tax paid by a self-employed person and some other like disability insurance deductions. So let's take a look at what is FICA. FICA, which is called this Federal Insurance Contributions Act, it was passed into law in the 1930s, in the middle of the Great Depression. It is just called Social Security. When you say Social Security, that is the FICA tax. Originally, it is designed to give monthly benefits to retired workers and their survivors. And this is the rate. Employee pays 6.2% of income to FICA. And then employees also pays 1.45% to Medicare, which is went into law in 1960s. Employer pays same rate, matching dollar for dollar for all employee contributions. In other words, when employee pays 6.2%, employer also pays the same amount to the same amount tax for employee. These two used to be combined and has a ceiling. This has a ceiling, and Medicare has no ceiling. What that means is to the first certain amount of income pays FICA. Any amount after that, there will be no tax. That will not be taxed. But for the Medicare, it will be just completely based on your on the pay. It will be fixed 1.45%. In our book, we are gonna use 130,000. The first 130,000 pay will be subject to FICA tax. The amount after 130,000 will not be taxed for the FICA. Of course, our book is published earlier, so that amount is no longer accurate. I think nowadays, like year 2023, 2024, it is probably around 160,000-ish that will be subject to the FICA tax. Amount above that, there will be no FICA tax. So each employee must have a Social Security card. All money set aside is credited to employees' accounts according to Social Security number. So those taxes, that's actually your money. Of course, your money is used to pay the current retirees. When you get to retire, you will be paid by the next generation's contribution. So basically, that's what's happening. All employees over age 25 receive a statement annually, 3 months before their birthday, showing how Social Security fits into their future. For some reason, for me, I don't receive a statement. Sometimes just an email when I provided my email to the Social Security website. So you can actually create an account at the website and check your plan, your future possible earning after you retire based on your current pay. So you can always submit requests for earnings and benefits estimate statement, but actually when you log into their account, you will see it. So now The table shows the tax rates and maximum earnings on which Social Security and Medicare taxes are paid. So back in 1950s, the Social Security is just paid at 1.5%. Over the years, it has increased. So since 1990s, it's been 6.2%. For the Medicare, it is now been 1.45%. Without selling, that's what it is. So for our book and for your homework, we are going to use the following for all examples and exercises. The Social Security tax will be 6.2%. Times your earning, the first 130,000 will be subject to 6.2%. The amount above this will not be taxed. Medicare will be 1.45% times your total earnings. There's no ceiling there. Now let's do some exercise. Let's take a look at the first scenario. If the weekly earning is $362.40, what is the FICA? Obviously, this amount of weekly earning, if you multiply by 52, the annual earning will not be more than 130,000. So we can just go ahead, multiply this by 6.2%. So 362.40 times 6.2%. This gives us $22.47. And for the Medicare, which is 1.45%, and this gives us $5.25. So these are the two taxes that will be deducted from your paycheck. So what if you have weekly earnings like this much, you won't get this many because this amount will be deducted from the paycheck. Okay. Now let's look at next example. Find the Social Security tax for the employee for the current pay period. In this case, the gross earnings so far this year is $127,797.03, and the current pay period will be $6,165.61. If you add these two together, the total earnings, it will be more than $130,000. And then we all just mentioned that the max earnings subject to Social Security tax. The Social Security tax is 130,000, right? So therefore, we cannot just use these to multiply 6.2% to find the Social Security, because that's when you add these two together, that's more than 130,000. Only the first 130,000 is subject to the Social Security tax. So therefore, we have to figure out how much should be what amount should be subject to Social Security tax. So that's how do we keep track of that? Let's do this. The prior earnings for the year is this much, $127,797.03, right? 3 cents. So this is the maximum subject to Social Security tax. So far, the earning is this much. So the difference will be the amount that is subject to the Social Security tax. Okay, so that's why I put these two together. So therefore we can say amount subject to Social Security tax is, you're gonna find the difference, okay? Find the difference. So minus these two will be, when you subtract these two, we have $2,200 $202.97. So that will be the amount subject to the Social Security tax. So this certainly, you cannot use this to find the Social Security tax, okay? Now, therefore, the Social Security tax is going to be equal to 6.2%, which is 0.062, times the amount subject to the FICA tax, 97. This is equal to $136.58. Right. So be careful when you find out that the amount is total is above 130,000. This is something you have to do. All right. Tax for self-employed person. People who are self-employed pay higher Social Security tax and the Medicare taxes because there's no employer contribution. When you are self-employed yourself is an employer, so you have to pay double. Is that right? Pay double. So self-employed person pays a rate that is double of that of an employee because, again, you yourself as an employer certainly need to match what employee pays, and you yourself as an employee need to pay that amount. So therefore it's double. Of course, this will be double. Therefore you will not be surprised to see 12.4%, which is double of the 6.2%, and 2.9% will be double of the 1.45%. Now it won't be tax on the total earnings. It will be tax on the adjusted earnings, which means usually, okay, usually this adjusted earnings, even though our book doesn't mention that, this is usually 92.35% of the gross earnings. And where is that from? Basically, assume no other deduction. Suppose there's no other deduction for now. So this number is coming from the 100% of your gross earning minus the 6.2% and minus another 1.45%. So we'll be subtract 6.2%, which is the regular FICA rate, and this is the regular Medicare rate. If you do this, this is what it is. Now, let's look at the first example. Find the Social Security tax and Medicare tax paid by Williams, a self-employed web designer who had adjusted earnings of $53,820 this year. So you really do not have to worry about how to find the adjusted earnings. Here, what I'm telling you is just FYI. So in our book and homework, you will be given the adjusted earnings. So in this case, because he's self-employed, so therefore the Social Security tax will be multiplied by 12.4% of his total gross earnings, which gives us $6,673.68. And the Medicare will be, let's multiply by the gross earnings, 2.9%. This is $1,560.78. So therefore, the total deduction of these two taxes will be $8,234.46. Okay, so not cheap, right? So that's how we find the self-employed deduction. Now, the last thing that we would like to talk about is the state disability insurance deduction. So the qualifying employees must pay a portion of their earnings to this SDI, the State Disability Insurance Program. And a typical SDI deduction is 1% of the gross earnings on the first $31,800 earned in a year. But this really vary by state. And Nebraska, I checked, doesn't have this SDI tax, but many other states have it, especially those blue states especially. Find the state's disability insurance deduction for an employee at Comet Auto Parts with gross earnings of $418 this pay period. And assuming that this rate is 1% and the employee has not earned met this threshold, so therefore this is pretty simple. The SDI rate is 1%. Therefore we just multiply by 1%, right? 1%, which is $4.18. Okay. So let's look at this example. Linda has earned $29,960 so far this year. Find the SDI deduction if gross earnings this pay period are $2,872 and use SDI rate of 1% on the first $31,800. Now, in this case, when you add these two numbers together, it's going to be above 31,800. So you don't want to just multiply this by 1%. You want to figure out how much is subject to SDI deduction, which means what's left, right? How much left is from like $29,960 to $31,800. So I'm gonna say keep track of that. The max amount subject to SDI is $31,800, and the prior earnings this year is this much, 29,960. So therefore the earnings subject to SDI will be, you want to find the difference here, right? You want to find the difference between these two numbers. If you do that, this will be $1,840. So therefore SDI deduction will be 1% of that, $1,840 times 1%, which is $18.40. Okay. Now we are going to close this section by doing the very last problem. Cheryl is paid an 8% commission on sales. During her last pay period, she had sales of $23,559 and returns and allowances $411. So we are talking about commission here, and then she had these sales, and there's a return and allowances of that much. Now find the amount of her deduction for Social Security at 6.2% and Medicare at 1.45% and SDI at 1%. And so we assume that at the end of this year, at the end of this pay period, Cheryl will still be below the FICA and SDI maxima. Okay, so let's first calculate her gross earnings. The sales is $23,559 right there. And the return and the allowances is right there, 411, I'm sorry. And we have to find the net sales, right? So let's find the net sales before we calculate the commission. This will be $23,148. So this is the net sales. And then when we find the commission, so we are gonna find the commission here. The commission will be 8%. So here's the gross earnings. Will be 23,148 times the 8%. Okay. This time I did not calculate that in advance, so I really have to do the algebra now on my calculator. So which is 23,148 times 0.08, and I get $1,851.84. That's the total gross earnings. So now with that, we can calculate the FICA, which is the Social Security, is at 6.2%, so 1,851.84 times 6.2%, so times 0.062, which is $114.81. So I actually rounded this one, so this is actually rounded. The next digit was 408, but we round it. And the Medicare is actually at 1.45%, so times 1.45%. So therefore I have $1,851.84 times 1.0145. So I have $26.85. Again, rounded again. And the SDI, which is the 1%, so 1,851.84 times 1%, which is $18.52 in this case. I just run this 18.5184 run to the cents, which is 18.52. So therefore, that will be the all the deductions for each one of those. All right, that's it for this section.